Hello everyone, welcome to our podcast for English learners. My name is James.
And I'm Olivia. We're so happy you're here. Today, we have an important and useful topic, personal finance.
Yes, personal finance means managing your money, saving, and making smart financial decisions. It's something that affects everyone.
Before we start our conversation, let's go over some important words. We will explain each word and give 2 example sentences.
The first word is current account. A current account is a type of bank account that people use for everyday spending. You can deposit money, withdraw cash, and make payments. Examples: 1. I use my current account to pay for groceries and bills. 2. My salary goes directly into my current account every month.
The next word is savings account. A savings account is a bank account where people keep money that they don't want to spend immediately. It usually earns interest. Examples: 1. I put some money into my savings account every month for emergencies. 2. The bank gives a small interest on the money in my savings account.
Now we have joint account. A joint account is a bank account that 2 or more people share, like a married couple or business partners. Examples: 1. Sarah and her husband have a joint account to manage their household expenses. 2. My sister and I opened a joint account to save for our parents' anniversary gift.
Next is in the black. If someone is in the black, it means they have money in their bank account and are not in debt. Examples: 1. After paying all my bills, I am still in the black, so I can save some money. 2. The company is in the black this year because sales increased.
On the other hand, in the red means that someone owes money or has a negative bank balance. Examples: 1. After spending too much on vacation, Mark's bank account is in the red. 2. If you don't manage your money well, you might end up in the red.
Now, let's talk about overdraft facility. This is a service that allows people to spend more money than they have in their account up to a certain limit. Examples: 1. The bank gave me an overdraft facility of $500 in case I need extra money. 2. Having an overdraft facility can be useful, but it's important not to rely on it too much.
That brings us to overdrawn. If an account is overdrawn, it means there is not enough money in it, and the person has used the overdraft facility. Examples: 1. I forgot about my rent payment, and now my account is overdrawn. 2. The bank charges a fee when your account is overdrawn.
Next, we have interest rate. An interest rate is the percentage that a bank pays on savings or charges on loans. Examples: 1. The interest rate on my savings account is low, so I don't earn much money. 2. The bank increased the interest rate on home loans, making them more expensive.
Now, let's talk about credit card. A credit card allows people to buy things and pay later, but they must be careful not to spend too much. Examples: 1. I use my credit card for online shopping and pay the bill at the end of the month. 2. If you don't pay your credit card bill on time, you may have to pay extra charges.
The next word is mortgage. A mortgage is a loan that people take to buy a house. Examples: 1. They got a mortgage from the bank to buy their first home. 2. Paying a mortgage every month can take many years.
Now we have account balance. This is the amount of money in a bank account at a certain time. Examples: 1. I checked my account balance on the banking app before going shopping. 2. My account balance is low this month because I had many expenses.
And finally, we have transaction. A transaction is any movement of money in or out of a bank account. Examples: 1. Every time you buy something with a credit card, a transaction is recorded. 2. I received a message about a new transaction in my account.
Great! Now that we know these words, let's start our conversation about personal finance.
Managing personal finance is important because it helps people stay in the black and avoid financial stress. If we don't manage our money well, we might end up in the red, which can be very difficult.
That's true. One way to manage money wisely is by using different types of bank accounts. For example, a savings account is great for keeping money aside for the future, while a current account is useful for daily transactions.
Yes, and having a joint account can be helpful for couples or business partners. It makes it easier to share expenses and track spending. But it's important to have good communication when using a joint account.
Exactly. Another key thing to consider is having an emergency fund in your savings account. This can help in unexpected situations like medical expenses or car repairs.
That's a great point. Also, people should be careful with credit cards. It's easy to overspend when using a credit card, but if you don't pay your balance on time, you could face high interest rates.
Yes, and speaking of interest rates, they affect both savings and loans. A higher interest rate on savings means you earn more money, but a higher interest rate on a loan means you have to pay back more.
That's why it's important to check the interest rate before taking a loan, especially a big one like a mortgage. A mortgage can take many years to pay off, so even a small change in the interest rate can make a big difference.
Exactly. And sometimes people spend more money than they have in their account. That's when the overdraft facility comes in. It allows them to overdraw their account, but there are usually fees for this.
Yes, and if an account is overdrawn for too long, it can cause financial problems. That's why checking your account balance regularly is a good habit.
Absolutely. Keeping track of your transactions helps you understand where your money is going and avoid unnecessary spending.
Checking your transactions regularly also helps you spot any mistakes or unauthorized payments. Sometimes people don't realize they are spending too much until they look at their account balance.
That's true. Many banks have mobile apps that allow customers to check their account balance, recent transactions, and even set up alerts for low funds. This can help people avoid becoming overdrawn.
Yes, and if someone does become overdrawn, they should act quickly to add money to their account. Otherwise, they might have to pay extra fees for using the overdraft facility.
That's why planning a budget is so important. A good budget helps people manage their income, expenses, and savings. It also helps them stay in the black and avoid unnecessary debt.
Exactly. A budget also helps people decide how much money to put in their savings account each month. Even saving a small amount regularly can make a big difference over time.
Yes, and having savings is especially important for big purchases, like a house. Instead of borrowing too much money, people can save for a bigger down payment to reduce their mortgage.
That's a great strategy. And before taking a mortgage, it's important to compare interest rates from different banks. A lower interest rate can save a lot of money over the years.
Definitely. The same goes for credit cards. People should look for a credit card with a low interest rate and good benefits. Some cards offer cashback or discounts, which can be helpful.
Yes, but it's also important to pay off the credit card balance in full every month. If not, the interest charges can add up quickly, making it harder to stay in the black.
That's a great point. And for those who share expenses, a joint account can make things easier. But both account holders need to be responsible and track their transactions carefully.
Yes, tracking transactions is important, especially with a joint account. Both people should communicate about their spending to avoid problems or unexpected overdrafts.
Right. Financial responsibility is key, whether you have a joint account or an individual one. Checking your account balance regularly and planning your spending can help you avoid financial stress.
Another good habit is setting financial goals. For example, someone might want to save for a vacation, a car, or even an early mortgage payment. Having clear goals can motivate people to manage their money better.
That's true. And when saving for a goal, a savings account is a great tool because it keeps the money separate from everyday spending. Plus, some savings accounts offer good interest rates, so the money grows over time.
Yes, but it's also important to be aware of interest rates on loans. If the interest rate is too high, borrowing money can become very expensive, especially for long-term loans like mortgages.
Exactly. That's why people should compare options before taking out a loan or using an overdraft facility. A lower interest rate can save a lot of money in the long run.
And when using a credit card, it's best to spend only what you can afford to pay back. If you don't, the balance will increase, and you might end up in the red.
That's a great point. Many people get into financial trouble because they don't pay attention to their spending. Keeping track of transactions and sticking to a budget can help avoid that.
Yes, being smart with money isn't just about saving, it's also about spending wisely. Small daily expenses can add up, so it's good to review where your money is going.
Absolutely. Managing personal finance well can give people peace of mind and financial security.
Yes, financial security is important because it allows people to live without constant worrying about money. Good personal finance habits help people stay in the black and prepare for the future.
Exactly. Whether it's saving in a savings account, avoiding unnecessary debt, or managing a mortgage wisely, small financial decisions can have a big impact over time.
And being careful with credit cards is also key. They can be useful, but only if used responsibly. Paying off the full balance each month is the best way to avoid high interest charges.
Yes! And checking your account balance regularly helps keep track of spending and avoid being overdrawn. It's a simple habit that makes a big difference.
Another good habit is setting up an emergency fund. Life is unpredictable, and having savings can help in difficult situations without relying on loans or an overdraft facility.
That's a great point. And when borrowing money, like with a mortgage, it's important to compare interest rates and choose the best option. This can save thousands over the years.
Absolutely. In summary, managing personal finance well means spending wisely, saving regularly, avoiding unnecessary debt, and keeping track of transactions.
Yes, and the good news is that anyone can improve their financial habits. Small changes, like budgeting and checking your account balance often, can lead to better financial health.
We hope today's discussion has been helpful. Managing money wisely is a skill that benefits everyone.
If you enjoyed this podcast, don't forget to like, leave a comment, and share it with your friends and family.
And make sure to subscribe to our channel for more podcasts that help you learn English in a fun and useful way.
Thanks for listening, and we'll see you next time.
Goodbye, everyone.